typically you would say it would be very unlikely to see the market sell off so sharply into the end of the quarter. I actually think being so close to the end of the quarter is incentivizing some of the selling in tech. Because when you have Amazon up 50% year to date, and Netflix up 100% year to date, and there's some fear that this push over trade wars and maybe some foreign investment in technology may gather a lot of steam going into the third quarter, you certainly want to take your profits now rather than all of a sudden looking at some of these stocks being down 10 or 15% in mid-July.
Do you agree with that? Do you think the market's making too much of this or not enough?
Hey, look, as I look around the stock exchange, I see CNBC and I also see the World Cup being broadcast. So the World Cup is up. The world economy is slower than expected. The July 4th weekend is coming up. Where are the buyers? Now, as Tim just pointed out, with restrictions looking as if they're going to come on Chinese buyers, that means fewer people are there to make the trade on the buy side. So I think the fact is the market has scrolled all the way back to where it was May 3rd? And I think if you're Donald Trump at the White House, you ask, was the market low on May 3rd? Was the U.S. economy in shambles on May 3rd? No. We were doing pretty darn well there. By the way,
a guy you worked with, George H.W., now when you line them up this far into their presidencies, the stock market did better under H.W. than it's doing under Trump right now. This is happening right now. So the last 6 months of weakness have added up, and it does go back to his Davos speech warning about clamping down on trade with China.
Well, but look, if you're Peter Navarro, whom I taught with at Harvard years ago, maybe when you were there, Kelly.
I was never there.
Okay. If you're Peter Navarro, you think if you can't take on China now, when the economy's growing at 4%, when unemployment is nearly at record lows, when will you have the wherewithal to do that? Now, does it take a toll on the economy? Yes. Does it take a toll on the market? Yes. But this is a president who made his name in real estate and in reality programming, and he knows a lot about game theory. And this is a game he's playing. We're all participants in it, whether we want to or not.
Shawn, when we look at the bond market, yes, it does react from time to time to the trade talk, but not as much as stocks have. Is that a surprise? Do you think down the line we could see people want to leave U.S. Treasuries in their masses if we have a real trade dispute?
Well, I think to the demand that there's any sort of investors wanting some of those safe haven assets, if you want to park your money somewhere, you have to think about it relative. If you can't do U.S. Treasuries, which you have the 10-year trading around 285, 290 basis points, where else can you go? You can look over to the Eurozone, but German bonds are only trading around 30 basis points yield. So I think that's one thing that is going to support demand for that. But if you do get shrinking deficits, I think a big driver of dollars coming back into U.S. Treasuries is a lot of the deficit spending, and that is we're sending dollars overseas, and then the overseas holders of those dollars reinvest them back into Treasuries. So I think there's going to be a little bit of a back and forth that will really determine what happens, particularly down at the long end of the curve.
And Rick, how does this all add up? You know, we're watching the dollar here, of course, which has been so strong lately. I don't know if that's the place to watch, or the rally, the move lower we're seeing in Treasury bonds.
You know, both bonds and the dollar, I think, are holding up very well, as was framed in Wilf's question, especially in a relative analysis with the sponginess in stocks, domestic and global. You know, I think John Hassia's comments that Kayla mentioned earlier, that what's going on with trade is going to lead to tighter monetary policy. Think about that for a minute. Let's look at what we've done to normalize. Now let's look at what everybody else has done. Let's look in China's direction. Let's look in Europe's direction. Let's look in Japan's direction. I guess what I'm getting at is forgetting what the outcome of these trade negotiations will be. It's more than we can take it and they can't. They are not only is our economy at the right time, as we've mentioned, but their economies are at the absolute wrong time. And I would agree with John Hassias that this is going to lead to a monetary tightening in countries where monetary tightening isn't even in the back of their minds. So I think that the pressure is definitely in favor of the U.S. I can't tell you how it's going to turn out, but I will tell you this. We're taking a bite out of the dollar index in the Treasuries every day. We don't see it show up very much, but we really do need to be prepared. As one of the guests said, if we start to see bond yields under 30 basis points, that's going to be a real test for Treasuries, which for the most part, every day this month have settled 289 3/4 up to 298, so basically in the 290s.
Tim, you're nodding during Rick's comments there. If we do start to see tightening elsewhere, what's the effect on equities globally and in the US in particular?
Well, it could be somewhat restrictive, but what I was really, to Rick's point, is that the Shanghai market is actually at a 2.5-year low. And there's this theory out there that China really can't afford to get into a trade war with us, and they know that, and we know that, because they are clearly the surplus country. And if it were to escalate to a full trade war, which I don't even know if anyone has really correctly defined yet, China's not going to win that. And as much as people make fun about Trump saying it's easy to win a trade war, it's easy to win a trade war if you're running a trade deficit.
Todd?
But let me ask you this. How many swing voters does President Xi face in Guangdong province?
But he
None.
does face workers who need work, or else they will go on strike and start protesting.
But President Trump has to worry about his party coming to him saying, if you want to win re-election, if we want to hold on to the Senate, we can't lose the farm vote.
But China does face massive internal pressure. The whole reason why they reneged on this consumer thing a couple of years ago that got them into this spat in the first place is because people were losing jobs at these factories and starting these protests. They needed employment.
That's true, but China
they have no other alternative. They've already doubled down on that approach. The stock market's still at a 2.5-year low. They've already spent all of this money and effort intervening because of what happened in 2015.
And what you're likely to see is what you're likely to see, which becomes a problem for the U.S., is further depreciation of the RMB. And we can fight a trade war over tariffs, but the other way it's fought is over currencies. And right now, the U.S. dollar has been strong. Earlier this year, of course, it was weaker, but now the strength has come back. The Chinese RMB has weakened, and that makes it ever tougher for U.S. exporters.
Yeah.
So it's a tricky policy that Peter Navarro and Larry Kudlow and Donald Trump are playing with here. We might win, or we might not.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.